Hello, everybody. Thank you very much for joining today's webinar. My name is Urvashi, and I will be your host today as we take a look at the great M&A value chain breakdown. So before I introduce you to our brilliant panel, I just want to cover off a few housekeeping points. First of all, this webinar is being recorded, and I will circulate a copy to you tomorrow, a copy of the recording, that is. Secondly, we've got time reserved for a Q&A at the end of the discussion, but if you have any questions as we go, please feel free to drop it in using the Q&A panel. Lastly, if you experience any technical difficulties, please use the chat function to speak to me directly, and I'll do my best to assist you. Okay, so on to the main event. Most people on this call know who FinQuest are, but for those of you who don't, who are new to us, we are a deal sourcing service that leverages data, AI, and people to find proprietary acquisition opportunities for our clients. The reason we're hosting this webinar is because, well, we're passionate about M&A and its potential to unleash the private markets. And part of doing that is providing a platform such as this for discussion on this ever-evolving landscape. So let me introduce the panel. I'm joined today by three CEOs and founders, all of whom in their various roles have been on the forefront of the changes in the M&A landscape. The first person I'd like to introduce is Omer Guven. Omer is CEO and co-founder at FinTalent, who many of you today will know as the man who's building the largest community of M&A and private equity freelancers, giving M&A professionals a platform to build their own neo boutiques and networks. And prior to FinTalent, Omer gained wide experience in his roles in investment banking, venture building, as well as corporate M&A. Welcome, Omer. Pleasure to have you.
Thank you so much.
Next up, we have Mark Corbidge, founder and CEO of Abbeydale Partners, LLP, a family office. Mark is an industry veteran with vast experience in private equity, investment banking, as well as corporate M&A. Now, the few sentences I have time for today are completely insufficient to summarize his illustrious career, but needless to say, he brings a unique perspective to the panel, having seen the evolution of the market from the sharp end. Mark, welcome.
Delighted to be here. Thank you for the invite.
And last but no means least, the man who will help us navigate the conversation today, FinQuest's very own CEO and co-founder, Tanguy Lessama. Tanguy started FinQuest several years ago to disrupt the deal sourcing market. And prior to that, among other things, he served as a consultant advising on post-merger integration and JV projects. Given that FinQuest has been so successful because of the value chain breakdown, who better to guide us in this conversation today than him? Tanguy, welcome, and over to you.
Well, thank you, Urvashi, for the very kind introduction, and Omer and Mark, I'm very delighted to have you to have this conversation with you. Hopefully, an exciting one, and a subject that we are all very passionate about. How the value chain has changed and potentially will change in the future, how much of an impact it has had on M&A professionals, and how much it will in the future, right? And I think everyone attending this webinar will be curious about what our thoughts are on the subject, and also again, feel free to ask as many questions as you want, and Urvashi will guide those questions to us alongside and at the end of the discussion. I think there is no better way to start a conversation on M&A than to show the history of M&A, and I think, Urvashi, if you can show the first slide we want to share, right? Not much to say about it, right? And in the sense that it's a constant growth of the volume of M&A, whether value or volume. Obviously cycles, right, going along the history, but overall a tremendous increase, right, in the size of the M&A market. And Mark, before we dig deeper into that, it would be great if you share with us a little bit what you have seen as the big changes in the M&A of the last 25 years, right, or whatever your experience would cover. And I think that would be a great introduction on the theme of what has changed already, and we'll give a perspective for the rest of the discussion.
Sure. Well, I think that the simple way of putting it, Tanguy, is that we've gone from being very much reactive to being far more proactive. So in the early days of private equity, it was a question of waiting around for a friendly investment banker to bring you a selection of deals. I remember vividly, in answer to a question from an LP, one of my colleagues saying that our approach was somewhat opportunistic. I think it's become more thematic, and that people, myself included, have started to target areas of interest and proactively go hunting rather than farming, to use a comparable. And I think the developments have really accelerated. So the changes in the last couple of years have really been at the speed of the last sort of 10 or 12 years. And I think that's set to continue. And I think the introduction of AI and what you guys at FinQuest have been doing is going to accelerate that evolution even further.
Okay. Well, thanks. And that resonates a lot. And I believe that many of the people who are listening to us are seeing the same trend, actually participating actively in that sort of trend towards more proactivity and more investment thesis driven approaches and targeted approaches. Omer, what's been your take on how what are the biggest changes you've seen recently on the value chain, but also even more generally in the M&A
I think
organization?
So generally, we can say that M&A is a mega trend, right? So when I talk to corporate M&A divisions, there's actually no option anymore to really make things, but really buy. And what is so when I also talk to other investors, so you have way more mid-market investors on the market. You have search funds. And even, well, scale-ups that, just raised, I don't know, like Series C, coming to the market and being all of a sudden a buyer as well. So you didn't have that, before, like 15 years ago.
Yeah, thank you. I guess one of the things and why we want to show this graph as a starting point is one of the drivers of a value chain transformation is the sheer volume of activity, right? It's moving from one size fits all because it's a small market, it's a rather integrated market, to something that is much more complex, where probably there's not one value chain, but there are many, right? Depending on what is the role you're taking on the market, and I think that's an important point. I would personally, I would also complement that by saying that one of the big changes we've seen is, whether it is corporates or private equity, an increased attention to the lower middle market, as we call it internally, right? Which we call it the 5 to 50 million or the 5 to 100 million type of company size, and that the sheer volume of those companies compared to the larger targets, the number 1 to 5 players in any segment that people used to target, now is a completely different ballgame, right? And that has participated into, well, the level of proactivity that I think, Mark, you mentioned, but also the necessity to have more tools to be able to support that kind of strategy, right? And I think that's a fundamental change that's actually accelerating, and that drives the need for such a restructuring of the value chain. I think if we go straight into the describing one value chain that we have sort of taken out of a few, right? Because again, there are different ways of looking at M&A. This one is pretty much a buy-side value chain, right? In the sense it corresponds to, okay, the company or the private equity has a strategy, then they're going to look for targets, and they're going to initiate discussions, and et cetera, until the deal, right? And I think if you look at that value chain, maybe Omer as a starting point, and I guess one of the things of the restructuring of the value chain is the internalization versus the externalization of a specific role on that value chain. And Mark, if we take the point in time 20 years back, we heard a lot about internalization, right? The bankers going internal to corporates or to private equity to support the deal execution, and that know-how that has sort of disseminated across the market. Looks like now there might be another trend which is more towards the externalization. And Omer, can you give your perspective on that specific part?
Yeah, so first of all, I think sellers. So let's if you divide it into two pieces. So the origination part or the benchmarking part, and then you have the what we see here, the value chain or the internal M&A process. I think we need to divide those. And so first of all, what you mentioned, right, deal volume increased, and sellers also became way more sophisticated. So first of all, you have way more data available, which makes the entire process even more efficient. So on the internal, on the value chain side, as well as on the matchmaking side. And plus you have so many different tools that you can basically use nowadays. We will jump into that later on, but I think that that makes this whole process way more efficient. So.
Mark, what's your take on that? The internalization versus the externalization, which is one way of looking at the value chain. There are other aspects to it,
yeah,
right? But
yeah, absolutely. No, I think there are a couple of points here. One is that the sort of the people within sort of corporate M&A, within private equity, who have sought to create their own networks and have direct interface have been the winners. And those people who've tended to remain internalized have, to my eyes, been the losers. And so what technology has done, and you use the phrase matchmaking, I mean, if you take the dating app analogy, it's bringing people together. There's still a need for that EQ, not just the IQ, in order to facilitate the sort of the chemistry that will convince people that they're the right people to partner with one another. And tech is helping to facilitate all of that in a way that it never used to, if you go back 20, 25 years.
And if I can add to that, so exactly, Mark. So basically, it all comes down also to volume, right? So what you can do basically with the tools, you can actually make your buy side way more efficient. You can increase volume, and I think this is a main difference to what we have seen like 10 or 15 years ago, or before the existence of those tools. It was way harder to actually source and find potential targets, to build up a pipeline, and so basically time was missing to build those relationships over a period of time.
And there was a reliance, if I may, on the part, a reliance on investment bankers to be the ones who had this clear line of sight into who would go well with who. And as you've just said, a technology means that you can have 10 propositions, 20, 40, however many you want, and you can decide, actually, I want to go and meet 15 of those because they all look quite interesting, rather than having this reliance on the banker to identify the one or maybe two. Mm-hmm. So that's the game changer as far as I'm concerned in terms of the technology.
Okay, so we're saying it's not just a question of internalizing or externalizing, right? Depending on the situations, it's also a matter of having the data to make the right decisions across the board and across each and every step. And when you have data, you can digitalize the data, and then that's where the technology comes in, right? And to facilitate the use of that data. And well, thanks to that, you know, if we look at the value chain, right, it's interesting to see that there are players, as the volume has increased, right, there is enough economic power to sort of be very focused on one specific step of the value chain and create a value proposition that is very differentiated versus the usual, you know, widely integrated value proposition that has been prevalent over the last decades, right? And I think it's an interesting point. And if I just take the example of FinQuest, right? the ability to consolidate data and to identify targets and to call CEOs and collect information has enabled us to create something that is pretty unique on the identify and connect part of the value chain. And sometimes you would have players who would specialize on one specific piece, or sometimes you would have a coverage across the board. And so I think the point is there will be more and more because precisely there is a scarcity for large companies, right? There's a scarcity for large platforms. And so basically the whole industry needs to be more active, needs to be more proactive, and needs to look down in terms of company size, and needs to define more sophisticated strategies to execute that, right? And for all these things, there are tools, there are expertise, and there are things you need internally. And in fact, corporates that are super acquisitive might need to internalize more roles, right, to be able to handle the volume, right? Because like maybe 15 years ago, and Mark, as you were saying, the tendency was to be more passive, wait for the bankers to come with a sizable deal, and then look at that sizable deal as the main way of operating. And now it's more about, okay, these sizable deals are very competitive, very hard to find, very hard to preempt. And because of that, it's all a question of, if you want to grow, if you want to move the needle, you need to do more smaller acquisitions, basically, right? And that's a fundamental value chain trend.
No, absolutely. I mean, the sort of, I think back to the days where we used to refer to a couple of private equity funds that sort of focused on buy and build. I think anyone now who isn't looking at buy and build as a way to deliver superior risk-adjusted returns for their investors is out in the cold, basically. And it's something that has to become systematically part of the equation, because quite simply put, if you're buying at the smaller end of the market, which is feeding the volume that we're all talking about, at 5 times, and you're trading at 10 times, simple maths, you're doubling your money without even seeing any top line growth. And that has got to be something that people focus on.
And Omer, are you seeing that as well? As you provide expertise to corporate M&As, right? How has the nature of the missions and the assignments evolved over time? And do you agree with Mark, basically?
Well, so first of all, like when we look at the value chain, and so it's very sequential, right? I think so. This is the main point that has changed. So it has become well more integrated and well more agile than the simple process and this is a sequential display, basically. So when we talk about internalization, we actually see way more internal parties being involved from early on. And so what Mark describes, and this is basically what every PE does, is seeing things really top down. But this is not really the case in corporate M&A. And so it allows actually more stakeholders, internal stakeholders, be it strategic finance, commercial teams, business development teams, to participate early on in the deals. And so that comes back to the actual origination. So it's so that the deals become smaller is not something that is dictated from top down, but basically is also since basic commercial teams became way more sensitive to M&A as an option to grow, right? So there you see a different type of deals, not only majority takeovers, but joint ventures, acqui-hires. Basically, that the size and the number of deals has changed, has also something to do with the general cultural change in corporates, that M&A is a real option for growth.
Okay, thanks. And so I think, Urvashi, you've already shown a slide, right? That is that sort of identifies a number of technologies and software and data providers that actually FinTalent has prepared, and in order to help a little bit illustrate the point that specific items and specific processes can be digitalized and become much more efficient than they used to be, right? And it's not about managing Excel spreadsheets and information in a way that is suboptimal. But as a starting point, right? I think digitalization started in the 2000s, so there has been a lot of evolution. Plus, coupled with the the higher level of sophistication of the M&A strategies and the sheer increase in volume of the M&As, right? And we come to a place now where there are a number of competing players and competing solutions for a single task. So can you elaborate a little bit and share your view on this slide and how you built it?
Yes. So what we looked at is, again, like the origination part, the matchmaking part, or how Mark would call it, like kind of the dating part, which is scouting and shortlisting, right? So you want to build up a certain company pipeline, and nowadays you can use Grata or other data tools to identify companies, because you can scrape their websites, but then again you actually need to approach them, right? And so basically using tools like FinQuest allows to build up a pipeline, but there are different tools to access information, right? Databases. Again, you can scrape company websites, and this is I think a very important part to increase the number of deals. But then when it comes to the internal processes, you can structure your team way leaner than it used to be, right? So if you have a deal pipeline that you build up, or software for integration management, so from early internal stakeholders can participate in the deal and make decisions even before signing an LOI. I think that has fundamentally changed. So it's not all about the head of M&A anymore. So you can have an integrated approach with different stakeholders. Yeah.
Okay. And Mark, I don't want to be too, insulting in a way, but
go for it. Go for it, Tanguy.
The private equity and M&A industry is a pretty traditional one, right? It's not the first one where you would say technology is sort of disrupting everything, right? And so in that sense, how has the adoption of technology across the value chain, have you seen that, or is it still in the process, or where do you think we are currently at this point?
I think it's a great question. I think you've got to be prepared to adapt, and you've got to accept and embrace the fact that disruption is taking place everywhere. I mean, my old firm TPG, with Airbnb, with Uber, etc., sort of have done some pretty remarkable things. But I think there's a technology piece in all of those as well. And sooner or later, it was pretty much inevitable that technology would start to disrupt the M&A market. But to the earlier point, I think it's made it a more interesting place for young professionals, whether that's within private equity or within corporates. Because I think that volume of deal activity means, I remember talking to a friend maybe 15 years ago who told me that in his firm, a partner doing a deal every 2.3 years was considered to be good. I more recently saw executives in my firm bemoaning the fact that they'd only done 9 deals, they hadn't hit the 10 that they'd hoped for in the same year. And so that gives greater responsibility, but it means that in order to achieve that, they've got to be able to rely on the technology that's available to them, the data sources, all of the points that Irma's just talked us through, so I don't need to repeat. And without that technology, the wheels wouldn't be able to turn in the way that they are now turning. And I think that's not just, and I'd be interested in your view, Irma, on this, I don't think that's solely true for private equity professionals. I think M&A within business units, whereas in my day it was tended to be at board level only that people discuss strategy. I think the evolution that I've seen amongst corporates is that now every business unit is expected as part of its annual budgeting process to list out the companies that, if they become available, would add to the product portfolio, the market share in particular areas, etc. So I think there's some similarities across both private equity and corporate M&A in that respect.
Yeah, I can confirm, and I see that also when talking to our private equity clients. So some clients really make the mistake that they use junior staff within their investment team to source deals for their portfolio companies. And to be honest, they have really no clue about what's going on. And then basically I mean, they might go for those 10 deals in fragmented markets, which is fine. But then it's really a pain for the portfolio company to either integrate it or actually talk to a seller or convince a seller to buy to sell to that portfolio company. And so what we clearly see, and this is what you are saying, Mark, right? That companies and portfolio companies in general become way more sophisticated in doing deals, and they're really good at it. And not only the management teams, but also commercial teams, strategic finance, and everyone who's involved, product teams as well.
Thank you. One of the key topics, right, when we talk about technology that we can't avoid these days is AI, right? I mean, software is one thing, but and data is one thing, but combining that with AI is potentially much more powerful. I was just reading a study that was issued the last few days by EY about, whether companies and CEOs are using AI specifically for M&A, and I think about a quarter of them, assert that they are actively using AI for their M&A. Now, is that true? Is that not true? Is not so much the question. Is it due to the hype and not wanting to be outside of the wave? But it's interesting to see that it has penetrated even the M&A space. And I'll be curious to have your view as to how important that will be in the future. And then I'll be happy to comment on my own, because obviously we've used AI for the last 4 years or plus to sort of play with the data, and so we have some familiarity with the subject. But in that regard, do you see an impact of AI on the value chain, on how things are going to be worked out? Omer, maybe, do you have a...
Yeah, so yeah, for sure. I mean, everyone knows that M&A can be really a pain in the ass, basically. So lots of text, lots of numbers, and also sometimes, lots of presentations. So large language models basically make it so much more efficient to see certain red flags, especially when you do especially like when you do financial due diligence, and it becomes more forensic. So you can actually I mean, the big four or auditing firms are already using it, right? And legal firms are also using it, and not only legal advisors, but also the head of M&As that I talk to in corporate, they use it to draft SPA, right? So general structure on the contractual part. And then what you see, like junior work, doing presentations for investment committees, steering committees, basically all that will be really simplified and is already simplified. So we will clearly see a benefit of AI benefiting M&A.
And Mark, do you have a perspective on that?
Yeah, look, I mean, I totally agree. I mean, the sort of the hook for me when I first got a call from FinQuest saying we've got this new product was the mention of AI, and that's what I think everyone is intrigued by, to see how that can benefit, how it can improve efficiency, to Omer's point. And I think we're only starting to sort of see the beginnings of that. So I think there's a lot more runway to go in terms of AI being used in the M&A market generally. I would question, you've put it more diplomatically than me, I think 25% saying yes, they use AI is, but that's a personal opinion.
Yeah, I think there's probably a difference, right, between using the tool itself as a sort of a consumer versus implementing AI in their own, infrastructure or data to uncover opportunities that, they would not otherwise. And I think this is two very different approaches. I think everyone uses ChatGPT now to write an email to sort of understand something about an industry, and it's interesting. We actually tested the large language models, what we found out is that if you use the ChatGPT or any other for that purpose to identify companies that fit with an investment thesis, the response is very disappointing, right? And it's always the same story, right? It's about the model is trained on a data set. If that data set is not made for the right purpose, and in that respect, for the buy side deal sourcing, then you end up nowhere, right? And you're not able from that sort of consumer approach you're not able to bring opportunities that you wouldn't see otherwise. And that's what we found. Now we're using that in our own infrastructure and in our own data to sort of further augment the data and leverage the data. Urvashi, I see you coming back, which means that we are still on time, but not too long, right? So maybe one more question, right? If we look at all these changes, right? Internalization versus externalization, and sometimes it goes in one way, sometimes it goes in the other. Also, depending on the size of the companies, whether it's private equity or corporates, the importance of technology, the importance of technology to support the relationships that you want to build, because fundamentally M&A is a relationship business, right? You want to build a relationship because integrating a company is a massive task, and you want to be first you want to choose the right company, and second you want to be in a position where you can execute that well, and that's a human thing, right? And so is there a risk that all these tools, all these data actually distorts or sort of diverts from that objective of managing the EQ versus the IQ, right? And do you have a view on that?
Well, Tanguy, when you write your emails with ChatGPT, then probably yes.
I don't. I personally don't. Right?
Just kidding, but I think so. So then still needs to be human touch, like when building a pipeline, right? And clearly, what I mentioned before. So you can increase the volume, you can handle multiple relationships simultaneously, be way more patient in your approach without being too desperate on the target. So clearly, but the emotional intelligence is key, not only so in front of targets and when approaching targets, but also when discussing targets internally with the internal stakeholders again, right? So it becomes key. But again, with all the technology, senior M&A leaders can actually focus on the emotional intelligence part or relationship building part rather than the nitty-gritty work, basically.
Completely agree with everything you just said. I think I've always said private equity, from my standpoint, is about building trust. AI will never help you in building trust. What it will do, though, is to render the process far more efficient so that you can spend a lot more time developing and prosecuting your bedside manner with more targets than would otherwise be the case. And therefore, what you're looking at the end of the equation is a much higher conversion rate with probably better targets and a better variety of targets than you would have had 10, 20 years ago.
Thank you. Urvashi, should we leave some time for the
Yes, please, indeed. Yes, let's do that. So we're going to open the floor for questions. So quick reminder to ask a question, use the Q&A panel just at the bottom of your screen. Now, all questions will be posed anonymously, but if you're sharing your name or your company or your sector is important for context, please add it to your question. We have had quite a few questions come through, so I'm going to start by taking a few of them. Let's start with this one. This came a bit earlier. Are you saying that iBankers are going to be obsolete?
Mark, maybe you can.
No, I don't think so. I don't think so for a second. I think the role that they are performing is evolving, and the good ones, as I said earlier in the piece, are adapting. I mean, adapt, and keep an eye on what's happening in the market so that you can stay ahead of the curve. Or to Tongay's expression, I think it was that you stay within the wave. If you don't, then sadly, particularly in a down market like this that we're experiencing temporarily at the moment, there will potentially be fewer iBankers.
Omer,
Yeah,
do you want to add anything to that?
Yeah, I actually think that we will see more efficiency in the market, and so the EV size or transaction size being increased, and at the same time non-brokered deals, because I just believe that current founders and companies are way more sophisticated and can handle lots of the process themselves because they have gone through fundraising process and so on. So I think that we will see the sizes of non-brokered. So basically, the average size will increase of non-brokered deals.
Tanguy, do you want to add anything to that?
Yeah, I think I agree that the bankers won't disappear for sure, right? I mean, the relationship aspect of M&A being so important to everyone in the industry, and I think that role will definitely stay. I think what may change, right, is when you have a best-in-class solution at one step on the value chain, at some point, if that is not embraced by the bankers, well, their clients are gonna use those, right, and potentially allocate the role of the banker to a more targeted piece of the value chain, and that's exactly what the sort of deconstruction and reconstruction of the value chain is all about.
Thank you.
Yeah, I think I'd just add, if I may, Urvashi, the fact that, I mean, in the past, when we've received information memoranda, there's been a sort of a list cobbled together of potential targets in the appendix, for example. If you nowadays use FinQuest to target potential bolt-on acquisitions and allow them to make those connections and contact the owners, and therefore you have a far more intelligent and actionable list of acquisitions, that's far more interesting for us in private equity, for example, because we know that by prosecuting those acquisitions that are available, and where the name of the CEO may be sort of listed in the back of the appendices, we have the chance to already tuck away reasonable growth in the early part of our hold period. And that kind of banks a certain level of return, which wasn't there when we were looking at a sort of a fictitious list of people that had just been sort of dragged out of a data source but hadn't been verified in any way, shape, or form.
Actually, sticking with you, Mark, I think this question's mostly for you. There's a huge risk associated with change and being an early adopter. How do you know when to take the plunge with new tech?
You have to assess it on a case-by-case basis. I mean, you could argue I was an early adopter of FinQuest, but we didn't do it for that reason. We listened to what I felt was a compelling argument, shared it more broadly, and it's now become its use has now become systematic, because why wouldn't you use it? And the cost sort of benefit analysis is a very easy one to undertake and come to a positive conclusion on.
Thank you. Anyone to add anything to that? We have got quite a few questions to get through, so.
Mark, thank you very much. I disclose that Mark has been a client with FinQuest for a couple of years, right? And hopefully successfully. So I have to disclose that, because otherwise, it looks like an advertorial, which it is not. But thank you, Mark, for the the testimonial. I think the point, beyond the early adoption, it's good to try new tools, right? In any case, because you don't know if you don't try. Some tools are easy to get a hand on, and then progressively expand the use of those tools to be more efficient and to build your own sort of value chain execution capabilities, and become. I think that's one of the themes, is how do you become more systematic about M&A, right? And that is the key, right? And as you mentioned, Mark, adapt is the name of the game.
Another great question that fits in quite nicely. For corporations, would you recommend, I'm guessing, using the existing inventory of software to start with the AI journey in M&A, rather than recurring or referring rather to internal IT or external firms to tailor a tool to capitalize on AI?
I think, I think AI is a big animal, right? And so you have one branch, which is the large language models that are very consumer driven now. Some companies are using those large language models to leverage their own data and to extract value from those data. From an M&A perspective, and I can speak for ourselves, right? The way we've used AI is to create the data when it does not exist, right? And it's not, in that sense, not very different from a large language model, right? So you generate content. Now it's a high probability quality content, and because of that, that makes companies more discoverable. I think there are different steps on the value chain. On the deal sourcing side, nothing beats the data, right? Meaning the AI is going to be more powerful if you have good data that runs on it to train the AI, right? So I think it almost starts with the data. You can only use AI if you have data, right? There's nothing worse than a data scientist joining a company and realizing that he first needs to build the data to work on it, right? And that's I think the way to think about AI is, as a consumer, leverage the tools that are widely available to sort of get us quickly up to speed on a number of things. But if you're going to use it, make sure you have the right data and the right infrastructure so you can leverage it.
Thank you. Anyone else want to add anything to that?
Yeah, I mean, I would just say it's all about scale. And the reason I would go to a specialist each time is simply a question of scale. I'll never get to develop on our existing software platform, whether I'm PE or a corporate, to the same extent as leaving distinct steps on that value chain on the slide you showed early on in the webinar, Urvashi. So I might as well just stick to my day job and let the specialists provide the information that they can provide.
Thank you. We are nearly at the end of our time. However, we've still got most people on, so I'm going to take a few more questions and extend this a few minutes because we have some great questions here. To the point on bolt-on acquisitions, will PE firms have to expand their teams now in order to execute deals for their portfolio companies? Who'd like to take that one?
Can I take that one? Because
Sure.
what we are seeing actually is so they are actually holding companies, private equities, and dividing their teams into platform investments and also dedicated teams for bolt-on acquisitions. And actually, there are two ways to solve the issue of value creation for portfolio companies. Either you have a dedicated team on the investment team of the PE working with dedicated companies, or you actually hire a head of M&A, a project manager for that particular PE, depending on the frequency of deals that you intend to do. And so there are two ways, depending also on the size of the portfolio company.
Yeah, I'd agree with that entirely. I mean, I think the sort of trend for us has been to encourage, if it's a sort of a clear buy and build strategy, to encourage those companies that don't currently have anyone in the M&A seat to use our leverage with the headhunters, which we use sort of very, very regularly, to try and find the best possible talent so that they can have that support for their C-suite in getting through the M&A that is available to them. I don't think we're necessarily adding people on the transaction side. What I am seeing more and more is, because I get called on it probably twice a week, is a search for good quality operating partners and people on the operational side, to Irma's point, who can be sent in to individual portfolio companies on a project by project basis and then recycled throughout the portfolio. And some of the largest names in private equity are scouring the market currently to identify that type of talent.
Anything to add, Tanguy? Sorry, you went green.
No, I just agree with everything. I think again, I think they're very different situations. If you are a scale up that wants to do your first deal, where you're gonna get more support basically externally because you just don't have the resources internally. Whereas if you are private equity or if you are a multi acquisition corporate, you'll have to structure things differently, right? And at the extreme, you have your own corporate development teams some PE funds are trying to build their own data, right, to identify the markets. Now we know it's not exhaustive, but some are trying. And I think it's very dependent as to what is the objective of the in mind, right, for the whether corporate or private equity.
Thank you. One last question before we round off. Omar, I think this is probably for you. Why do you think the market for contract/interim staff is taking off now where it hadn't before?
I think that the market was has been always there, but what is changing is the age of freelancers, basically, or interim staff. So if I look at our platform, so we have freelancers with only 3 years of experience, like second-year analysts or associates, and up to like 25 years. But what we see is clearly that they are purpose-driven, choice-driven, and want more flexibility. And that there's a huge gap right now in the M&A market, especially in the execution part, not talking about strategy or CDD or pre-LOI phase or PMI phase, but really when it comes to buy-side professionals, project managers, that here the main driver was actually, I mean, the cloud, right? I mean, let's remember 10 years ago how like Skype was a pain and Teams didn't exist. And then obviously COVID, right? So COVID, I mean, Fintel would not exist if COVID did not happen. So basically it allowed to, and obviously the M&A tools, virtual data rooms, and all that enables basically to work more freely, more remotely, and access talent that has not been there before, basically. And this was a game changer.
Okay. Would either of you like to add anything else to that? No. Okay.
No,
Can I do a quick round robin then? I'd love to know, what is your one key takeaway when it comes to the breakdown of the value chain, the great M&A breakdown, the great M&A value chain breakdown, rather. Omar, to you first. What is your one key takeaway on this?
I think we will see exciting times, and I think that M&A will become agile, and we will see great talent.
Mark, to you?
Yeah, so without wanting to burst into song, I think it's only just begun.
Right, thank you. And Tanguy?
Yeah, well, just I think it was interesting in this conversation to discuss the tools, but also to sort of realize, and sort of as a key point to be successful at M&A, how the human component is key, right? And I think it's it shouldn't be a diversion from the objective of building relationships. It should always be tools to build better relationships and more targeted and more exhaustive and more choice-driven relationships than random. So I think that's going to be, and because that's just the beginning, right? And because at this point our data shows that 40% of the companies are barely called by an investor or a corporate buyer, whereas they do fit with their investment thesis, right? The sort of the reservoir of potential in the private market is absolutely astounding, right? And so because of these reasons, I anticipate that the tools and the data and the professionals are going to be able to leverage more and more and generate much more opportunities in the future than in the past. And I think that's very exciting, right? Things are going to accelerate, things are going to get deeper, things are going to be more expert driven versus Swiss the jack of all trade, and the coordination and the way to work is going to be fundamentally different in the future. And I think for all the M&A professionals apparently who've been attending that discussion, and most of them having a lot of experience in that field, right, have seen those changes. And I think the velocity of those changes is actually accelerating, which is very exciting, very exciting.
Okay, marvelous. All right, well, we have run over, so I'm going to end it there. This has been a fantastic discussion and a very meaty topic. I'm just sorry we don't have more time. I do want to take this opportunity to say a big thank you to our panel for all your insight and your sharing of your experiences with us. I'm so glad that we got to examine this topic together. It's been a real pleasure. Thank you. And thank you to the audience for joining us today and for your engagement. Some really great questions coming up there. And speaking of, if you have any other questions or would like to continue the conversation, please don't hesitate to reach out to us. I'll drop our contact details as well as those of our panel into the follow-up email with the recording, which I will send to you tomorrow. And of course, if you'd like to be the first to know about any upcoming webinars we have, I'll also share a way for you to sign up to that as well. Final note, when we close out of the webinar, a survey is going to pop up. Please take 20 seconds to let us know what you thought of the webinar. We really do appreciate and value your feedback. And that brings us to the end of the session. Thank you again, everyone. Have a wonderful rest of your day. Bye-bye.
Thank you.
Thank you.
Thanks.